You ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, shake it. Raise your hands up, raise them out.
All right. Hi, everyone, and welcome to today's episode presented by Forex Trading Asia of the Currency Call. And we've got a few more streaming in as well. So welcome to everyone from the LCMS Traders Club that is watching the call live here as well. And thanks to everyone that jumped on the evening call as well with the live trading session last night. Hope everyone got a lot out of that as well. And definitely, if you didn't, please watch the replay of the episode too. So this is the Currency Call, everyone, and it is episode 437, the 9th of December. And a quick introduction for anyone watching this who is new to the LCMS Traders Club or who is watching the telecast on YouTube, which is around 3 hours delayed. If you would like to join the LCMS Traders Club, make sure you visit the Jindal Thai website, which is in the bottom of the video that you are currently watching. And the Currency Call is presented every Monday to Friday at 11 a.m. GMT plus 8. And the currencies we analyze are as follows. We do Aussie and Kiwi on Monday. We do the Euro on Tuesday, the Pound on Wednesday. Today, Thursday, Yen and Gold. And then tomorrow, Friday, we've got CAD and crypto. And in the Currency Call, we go through the market economic updates, the key support and resistance levels of the currency pairs in focus for the day, trade ideas, and of course, we dissect key breaking economic events, such as later in this episode where Kim Hong will go through the Bank of Canada interest rate decision as well. And the Currency Call aims to be very beneficial to both the long-term investors and the short-term traders. And here we will go through what could move prices, the possible trade ideas, and we'll also go through potential targets and risks of those trades as well. Finally, a disclaimer. Any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering in any trades. And as I mentioned just before, we did have the Bank of Canada interest rate decision. We've got Kim Hong here, currency strategist at LCMS Traders, just to go through the details of that and what it means for any trading opportunities as well. So over to you now, Gimme.
All right, a brand new day. Now we have our drilling noise back again. Okay, but no worries. Today I got this. You guys can see it's actually a 2-decade-old microphone. So I'm not sure if it's going to work well. All right. So let's just give it a try. Okay. So Bank of Canada. Yeah. Basically, I think for those of you who have looked at the chart, well, there's not actually many things that went down during the meeting. Okay. But the Canadian dollar actually weakened. All right. I think my screen just froze again. Okay. Can you guys see the Bank of Canada monetary policy statement?
Not yet.
No? Yes.
Still loading.
Okay.
Not yet.
Okay. Then yeah, I'll just start with it first. So basically, all right, the Bank of Canada actually held interest rate unchanged. All right. And its QE, as you guys know, has already ended, all right, since the October's meeting. So over here, we are, let me just close this. Over here, we are looking at the current, the statement that was being released yesterday, all right? So over here, you can see that, you know, they have interest rate unchanged, okay, at 0.25%, okay? QE has ended. So what are the changes that that took place this time around? Okay, first thing, view on the Omicron variant of the virus. Okay, what's wrong with me today? Let me just go straight to the, where is it? Devastating. Where's the word devastating? Just like the noise is devastating. Okay, over here. The devastating floods in British Columbia and uncertainties arising from the Omicron variant could weigh on growth by compounding supply chain disruptions and reducing demand for some services. Okay, so I think it's can be expected, you know, that central bankers around the world, okay, pretty much would rather take a cautious approach towards this whole Omicron, right? Hence, we are actually seeing some of them, acknowledging that this new variant can actually cause potential uncertainty to the economic recovery for their country. All right. Of course, some of them would say that confidently that it is unlikely to deter the economic recovery, right? Like the RBA, Governor Low, has just mentioned just a couple of days back during their meeting, that it's unlikely. Yes, it may be. It is a new source of uncertainty, okay, but it is unlikely going to deter the economic recovery. Okay, so yeah, that's pretty much it for the Omicron variant side of things. Okay, for what it's worth, okay, the forward guidance. Let me see, where is it? Forward guidance. I think it's the last paragraph here. Okay, cool. So the forward guidance remain unchanged. Okay, so forward guidance meaning this part over here. All right, we remain committed to holding the policy interest rate at the effective lower bound until the economic slack is absorbed, so that the 2% inflation targets is sustainably achieved. Okay. In the bank's October projection, this happens sometime in the middle quarters of 2022. So this part, this middle quarters of 2022 remains unchanged ever since a change took place during the last meeting, okay, back in October. Because I think before October, they were saying something like second half of 2022, okay, but then in October, they actually revised it more hawkishly in a sense, okay, to middle quarters of 2022. That means we can actually expect, something like April, May, June, July, August, and September. All these 6 months being mentioned are all fair game, all right? So fortunately, we are still hearing this from the Bank of Canada, okay? And finally, one more change that they actually made, I will have to make reference to the previous report later on, okay? It's basically the inflation. Where is it? Okay, now expect CPI. Okay, good. So CPI inflation is elevated, and the impact of global supply constraint is feeding through to a broader range of goods prices and things like that. Okay. Meanwhile, core measures of inflation are little changed since September. Okay. Now, here is the part that I would like to highlight. The bank continues to expect CPI inflation to remain elevated in the first half of 2022 and ease back towards 2%, okay, the central bank's 2% target, all right, in the second half of the year. Okay, remember, in the second half of the year. Now, let us just switch back to the October statement, all right. Where is it? Okay, so this is the October 27 statement, all right. So back in October, this was what they mentioned. The bank now expects CPI inflation to be elevated into next year and ease back to around the 2% target by late 2022. So previously, they were actually expecting inflation to fall back down to their targeted range, okay, by late 2022. By late, I mean, of course, there's many definitions, right? But the term late itself tells you that it's probably more towards like the October, November, December, the last quarter kind of part of the year, okay? So it was pretty much until the later part of the year. Then right now, they are actually saying, okay, they actually revised it to second half of the year, meaning, we can expect inflation to come back down to the inflation targets around maybe June. It can be as early as June, July, or August, no longer the September, October, November, December kind of thing, right? So this is actually, I would say, a positive outlook coming from the Bank of Canada, okay? With inflation coming back down faster, then, you can actually, preferably curb inflation from the start, okay, of 2022 with hike of interest rates, okay? And then before we can actually see this whole inflation coming back down and being achieved sustainably at the central bank's target. So this is actually a positive thing, all right? But nonetheless, we did not see a strengthening of the Canadian dollar, okay? Yeah, you guys may be wondering why and things like that, but there are some saying that there are some out there, okay, they are actually expecting a rate hike from the Bank of Canada in December, right, to close off the year with with a bank with a interest rate hike of 0.25 and things like that, but they did not deliver. Okay, hence the weakening, the disappointment, hence the weakening of the Canadian dollar. But personally, I feel that like what I've mentioned on during the prep for Bank of Canada's meeting, it is very unlikely that the Bank of Canada will be carrying out an interest rate hike that soon. Okay, especially when they have just ended QE during their previous meeting. All right, so. And moreover, all right, with this whole Omicron uncertainty coming in and things like that, it's it just makes the Bank of Canada want to be more cautious, want to be more adopt a wait and see approach. Let's see how this whole Omicron turns out. When it's deemed not so deadly, or maybe not so not so infectious, then yes, okay, we will be more convinced to actually hike interest rates. Okay, so nonetheless, my view on the Canadian dollar at the moment is probably going to be very volatile. Okay, probably going to be very, very volatile. First of all, because of the Omicron uncertainty. Now, second thing. Okay, I think Scott shared this snippet of OPEC plus, what do you call that? Increasing oil supply by 500,000 barrels per day. Okay, for the month of November. Okay. Then I went to do a quick search, and this is the article. I'll be sharing this article later. Right. So the headline basically says OPEC Plus lifts crude output by 500,000 in November amid Omicron uncertainty. Now, how much were they supposed to hike again? 400,000. Okay, 400,000 barrels per day. That was being decided in back in October's meeting, right? 400,000 a month. 400,000 a day for the month of November. And then they actually hiked by 500,000. Well, that is because they, the OPEC Plus, they actually have this, they felt that they're actually downplaying, okay, long story short, they're actually downplaying this whole Omicron uncertainty, right? They believe that this new variant is unlikely going to cause a negative impact on oil's demand, all right? And because of that, they just, in a way, let loose and, hike production by 500,000 barrels per day for the month of November. Okay, so in the article you can see the breakdown. OPEC Plus boost by 300,000. Non-OPEC Plus, meaning Russia and some other smaller countries, okay, lift production by 200,000 barrels, which is equates to a total of 500. All right. I would say this article is quite a good read. It actually gave a breakdown for those of you who are interested in this whole, which country produces how much and things like that, or keep track of all the figures, the numbers. Okay, this article actually gave a I would say a pretty thorough breakdown of how many barrels did maybe to Iraq or Nigeria actually produce during the month of November and things like that. Okay, so yeah, so long story short, Canadian dollar is likely going to be pretty volatile. All right. Yes, we have seen good employment data coming out from the Statistics Canada. Okay, and inflation has been rising as well. So it's more of the 2022 that I'm more concerned about, as in how many times will they hike interest rate? Okay, some say 4, okay, once every quarter, some say 3 and things like that. But personally, I would say, with this overall optimistic look coming from the Bank of Canada, okay, in the long term, okay, we can actually expect a strengthening of the Canadian dollar. But for now, we just have to put up with the volatility. If you guys are trading the Canadian dollar or maybe the Canadian CAD yen, dollar CAD, and things like that, just keep your trade short term and things like that. All right. With that, do we have any questions? No? Jin shaking his head. No questions.
No
okay.
questions today. Seems really quiet.
All right. Seems pretty quiet except for the drilling noise. Okay. Thanks for putting up the drilling today. I'll hand it back to Scott.
Thanks for that, Gimme, as well. So just to get into it now, guys, we did have, well, frankly, it was an interesting session last night, and just bringing up the US dollar index now, I was looking at the euro pound as tell you potential trade, but nothing taken yet. So US dollar index, just on the 4-hour time frame here with Sam Trade, as you can see, we did dip below the 96 support zone as well. We hung around there for a little while, got as low as, might have broken 95.80. No, 95.81 was where we started turning. And just from last night as well, just with what we saw with the JOLTS job openings as well, that was exceeding expectations too. And just something that I was looking around at this morning, just once markets had settled as well. We do still see a risk on sentiment as well, just overall, but I just want to put this into context. So just to start with this one here. So with the number of job openings, you can see we are pretty much at an all-time high. This goes back to 2002. So there are a lot of jobs that are available, and still really the issue is that participation is still a little bit down. So, multiple factors for that. We've discussed this. So that really saw the US dollar sort of just sink a little bit lower, and maybe gives the Federal Reserve a bit of breathing room. But really, it's all short term for the US dollars. Weakness that we saw yesterday, just with what we're seeing with the expectations on inflation as well for tomorrow night. So make sure that if you're not already, you are in the Traders Club, because we make sure that ideas are updated upon, because we can see markets are very volatile, and frankly, it's been a bit challenging this week as well. So it's always good to be in a team environment as well, just to get the assistance and get the updates when things change. And just finally, also, we've got the 2-year US bond yield as well. This is up again. And this just implies that short-term expectations on interest rates rising are, definitely coming into the market now. So that is what we're seeing. And I discussed that a little bit yesterday as well. So that inflation number, and I'll just go to the calendar now, just have a little look at what we are expecting. So this was last night. We did see that job openings number beat expectations. We just got a little bit lower down now. We've got today. Today, even though the initial jobless claims comes out once a week, if we do see, it come in less than, what is expected, around 220,000 or so, or 222, that, will just really reinforce the situation that employment is looking healthier, even with everything that's going on. And with the Omicron thing, we have seen some positive news out with third doses of vaccines that are available do help as well in dealing with the Omicron variant of COVID. So again, just reiterating, guys, with the inflation figures and what we are looking for, we do have a lot of data coming out later in the session. And, we just got to, step back and say, if we have a plan, we know what's coming out, and we've just got, as you can see, 0.7 for month on month for the CPI for the US. We're very likely we could beat this. And if that is the case, just, be prepared for some volatility. Try and wait a little bit before jumping into trades as well, let things settle. But, for my outlook for the US dollar, I think it's just going to be settling for now until we do see in the lead up. We have seen in the lead up to big news events, markets already start moving where they think, the data is going to be at. So just, if that presents an opportunity, remember, maybe keep your size a little bit lower and don't have too many open positions as well. Try and focus on the very best setups only. But those are my thoughts there on the US dollar. And now we do have yen, and we've got gold as well with Jin here, just to see what is looking good in regards to those pairs. So over to you now, Jin.
Thanks for that, Scotty. So what looks good? We've just been last night, on Wednesday night, we had our live trading session with all club members. What was interesting was I gave everyone a bit of a heads up into what I was going to be talking about today during the call. So it feels like I'm repeating myself right now, but with everything, let's start off with looking at the economic calendar here. Thursday, we do have, with the yen and gold in focus, what could move prices. 9th of December. This is some yen news which was released, but not going to move prices too much. You can also see, I'm just going to do this quite quickly because it is quite straightforward. A lot of Eurozone news, a lot of pound news, not going to move prices today. The only thing we have for today, the US initial jobless claims. This is a weekly number, not a big change as well. So I'm not anticipating big price movements for today. In fact, even for tomorrow, on Friday, we don't have that much news apart from the UK GDP numbers, which we have spoken about yesterday. We've already done our analysis there. And also the US CPI number looking to stay at that higher bound, looking at that 4.9 and year-on-year CPI at 6.7% at a higher bound. I think that again, with this numbers to be released on Friday night, we might see that US dollar strength come back into play. But as we approach the end of the week and heading into next week, I want to scroll through into next week's news. You can see again a lot of news on Monday for Japan, but not going to move prices too much. The focus for next week should be on the UK jobs numbers, on the where was it? On the UK CPI numbers, and then on the US or Canadian CPI numbers as well, and the US FOMC rate decision, rate statement, press conference, and economic projections. As a way to end off the year, this will give us a good heads up into what we could be looking forward to into next year as well. And with that, with next week as well, we do have the Bank of England's rate decision. This was one of the reasons why we saw that big, relatively big drop in the pound dollar yesterday, because the likelihood of a rate increase dropped quite significantly. So we saw that pound dollar weaken, dropping below its support level. And then also next week is a big week. We have the Euro rates decision, press conference as well to be released. And then on Friday, take a breather towards end of the year, end of the week and end of the year. We're probably going to see markets consolidate from that point onwards. So what that all means, looking at the charts here, the US yen on the H4 time frame, currently at the 113.72 level. Looking at, I was just looking at the way that Scott was sharing with you the dollar index. So dollar index briefly dropped below that 96 level, looking at a recovery back towards that resistance and possibly back above that resistance level. So I'm expecting this to continue towards the upside. I'm not sure whether to go all the way, but back up above this resistance. So anticipating the dollar strength, what I should be looking for, what we could be looking for is for the US yen to test that 114.45 resistance level. What you could be looking for is buying opportunities above 113.75, about a 30 pip stop loss for a good 60 pip take profit level, a 1:2 risk reward ratio towards the upside. Looking for it to repeat something that happened 1, 2, 3, 4 weeks ago, where it broke and bounced off this resistance towards the next resistance level. But this US yen will not be high on my trading list at this point. I'm actually more keen towards the Euro yen. Yesterday, I was telling all our club members that Euro yen was not high because on my list because it was retracing, it was bouncing back up. But how it looked overnight was it hit that 129.13 resistance. And at this point, looking like it's going to turn back down. Why I think that this might be a good trade towards 128 is because if it does close below 128.82, about a 40 pip stop loss for a 70 pip take profit, we might see it turn back down following that trend, rebounding off that resistance. Looks like a good setup. And also because looking at the euro dollar here, analysis done on Tuesday was for it to come up, test that 1.1350 and turn down. Looks like it's starting to move that way. So if the euro dollar does turn down from this point, moving along that green line towards that 1.1254, we are likely to see the euro yen continue in that fashion as well. So a couple of trading opportunities here, both on the euro dollar and on the euro yen for that good 60 to 70 pip profit towards that 128 support level. quite straightforward. And lucky last on the pound yen it's been sitting in that consolidation. We saw that big spike down yesterday, hit that 149.39 level, bounced straight back up, and still in that consolidation. You can see the last time it did that consolidation here, towards the end of last week, we saw that quick drop and bounce back up. Now it's sitting in consolidation again. I'm also expecting that drop to repeat into what happened last week, looking for that drop. I'm looking to sell. I will be looking to sell below 150. Tight stop loss at about 40 to 50 pip. A take profit of about at least 50, or maybe even to last week's low of about 100 pips. You could be looking at a 1:1 or 1:2 risk reward ratio towards the downside. But bear in mind, with the pound yen, we do have some UK news to be released tomorrow. And also with the way the pound dollar has been moving, it's broken that 132.22 support level, looking for that downside. If it does continue down, then we could see the pound yen being dragged further down. So ranking the US yen, the pound yen, and the euro yen, I would say euro yen as a highest likelihood, as a highest priority, pound yen probably second, and US yen third. And then looking at gold, analysis was done last night. Someone asked a question, what was my view on gold? The last time we spoke about it, I said it was going to sit across before moving up. I've dragged that line further to the right. I said now look at it as likely to sit right across at this 1777 level, test that support a little bit more, sit in that consolidation, because there's no surprises from the markets at this point, apart from recently Omicron, but looking like the fears are being quelled a little bit more. I think that we might see it sit across for a bit longer before climbing back up again. So what you should be looking for in gold would be buying opportunities above 1798 all the way towards that 1870 level, or even at 1896 level. But I think that gold is likely to trade within this range for an extended period of time, barring any major surprises coming from the global markets. So with that said, I'll pass it back to you, Scott.
Thanks for that, Jin. I've just shared the trade ideas as well, everyone. And just make sure that if you haven't already, you do subscribe to the LCMS YouTube channel as well, where we update daily. And if you're not already, become an LCMS Trading Club member as well. There's been a lot of activity as well, depending on where you are in the world. There's always someone in the chat ready to talk trading and share ideas. So thank you again, everyone, for watching, and hope to see everyone tomorrow for CAD and cryptocurrency analysis. Bye for now.